Hey everybody, Boris speaking Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar, Sep 16th to Sep 20th, 2019. Story in the common dollar land is actually quite interesting. We had this, very interesting change of tone towards Aussie and against Caddy, and with Kiwi really kind of bringing up the rear on a little bit of profit taking. And it's kind of interesting because the general story was basically pro-U.S., pro-China trade. We had a lot of nice rhetoric and rapprochement going on between China and the U.S. That was obviously very, very helpful Aussie, and that really had a lot of continuity for the rest of the week. We also had a big decline in oil because, again, easing of tensions between U.S. and Iran, and that had a very negative impact on dollar CAD. And then, of course, Kiwi, I really can't figure out. I think it was just profit taking and bringing up the rear as to why the Kiwi was weak. But the bottom line is that as we enter into the new week, the levels, especially in the Aussie, have really started to go higher. And there is significant enough evidence, especially if we get decent employment data this week, that we could go all the way up to 70. We thought 69 was a resistance level, but it really isn't. We took out a pretty decent chunk of the resistance. I'll show you on the charts. And really, it could be a move all the way up to 70 before Aussie finds any serious exhaustion. Dollar CAD, on the other hand, up against that big, big cement ceiling of 33.50. It'll be interesting to see what happens there. If that shows even further weakness this week, we don't have much on the calendar, but we do have a little bit of Canadian data, then it kind of really flips the script here and puts dollar CAD towards the 135 level as we go forward, which is be very, very surprising. I find it actually incredibly surprising given the fact that we have probably the most hawkish central bank in all of the G7 universe, along with very decent data sets. So to me, if I'm trading fundamentally, I got to trade against this 133.50 level. But if that gets broken, you cannot try to hold the longs. I think it'd be a fool's errand to try to short above that level. So it's a limited risk, but you got to be very, very wary that if the price goes, it doesn't matter what the funda says. You have to respect the move. And finally, Kiwi kind of just bringing up the rear here, still just consolidating around the 64, 63. 64.50 was a big, too much for Kiwi to take out. We'll see if there's sort of adjustment in the Aussie Kiwi land, but Aussie Kiwi had a big, big bump this week and kind of a breakout move here. And it could continue if we get positive data sets. As far as the COM dollar data set, it's really basically two things this week that are of any material import. We got the Canadian data with CPIs, and at the end of the week, we have the Canadian retail sales, which is important. Here, we're actually bullish Canada. That's why I think 33.50 may hold. And the center of the week, we have the Australian employment data. Here, tough for us to call it because it's sort of a mixed set. In services is stronger, weakness in manufacturing. Generally, Australian employment has been far stronger than everybody thought it would be, and has been really the bulwark of Australian strength, and the reason why I think the RBA has remained stationary for the time being. There's one other event that I actually neglected to mention, which is the Kiwi GDP. That's interesting too. Here, mixed picture as well. Very hard for us to call it because we have a stronger trade balance but weaker retail sales. Could be market moving. If that actually proves to be strong, and maybe labor proves to be weak, there's an opportunity there in the Aussie Kiwi to readjust. But we'll have to see how the data goes before we can trade it. Now, as far as the charts go, let's take a look at the charts here. So here's Canada. And here's the interesting thing about Canada. So Canada just basically had this massive V-shaped rebound as oil just went sharply lower. But we're coming up into what has been essentially a complete wall of resistance in the 33.50 level. And that's what I'm talking about here. So you have 75, 80, maybe let's call it 100 pips worth of risk against which you can trade into what presumably should be a relatively decent fundamental picture in the background. So I think just as Canada is notorious, for doing these big down moves, it's also notorious for making a reversal. As a matter of fact, I think to me what's interesting here is that if it makes a reversal, if it kind of dies out in the first couple of days of the week and comes back down below the 32.50 level, that would suggest a lower high and a more bullish Canadian posture and a move back down to the 3100s. So I like this. I like this almost as a blind short here, just kind of a blind short because you really don't know where the exhaustion is going to be. if you want to be a little bit more conservative, you might want to wait for a red daily candle to kind of see where it's going to stop. But this zone over here, it's either holds or it doesn't, and it's very, very hard to sometimes time it, so you kind of have to just close your eyes and trust that it's going to hold. On the Aussie side, here's what's interesting on the Aussie side. Let me just move this around so you can see it a little bit better. So what's interesting about the Aussie side here is this big breakout. This was former low, like so former support becomes current resistance. We take out the resistance at around 68.25, and that's a bullish move. Now we've been dying in front of the 69s. There's clearly sells in front of the 69s. But if we get strong employment data, which keeps the RBA stationary, if we get more lovey-dovey rhetoric from the U.S.-China front, it really puts us into a pretty decent position to break out the 69. So we've got to be watching this. If it's a weak breakout, then yeah, we probably 69 is going to be the resist. But if we go to 69.25 or so, I think it's then puts us really into scope towards the 70s. It puts us into that whole 69.70 box as we go forward. And then finally, here's the Kiwi. Kiwi got badly rejected at the 64.50s. A lot of adjustment here. If the GDP is weak, it really calls for us to kind of move towards the lower end of the spectrum. The reason, of course, here is because a weak GDP is only going to encourage the shorts to think that the RBNZ is going to cut even more. This is the RBNZ cut against which we are basically trading, and that's been the short dominant candle against, which we had a very massive downtrend, and then of course we had a short covering recovery, and this recovery pretty much died essentially on the close of that RBNZ candle, that 64.50 level. So we need positive funda to reverse these flows, and if we don't get it, I think you have a reasonable chance here for maybe drifting towards the testing a double bottom at around 63. That's how the COM dollars shape up this week. I wish you guys the best luck, the best trading. Boris, over and out.